This is the first of what I hope to be a semi-regular series of updates, which I think will be better by video than often my written form. And I've traditionally tried to do this format at the end of year function, which perhaps isn't always cut out to be an environment where people are listening to some reasonably serious material. So let's try this. Some will be just general fund updates, and some I'd like to focus particularly on some of our investments, and that's what this first one will be. So you can see on the screen there that I'm going to focus on Allmain Property Group. You will have received a fairly detailed summary of what that business is all about, and I wanted to follow up with a detailed sort of outline from the horse's mouth, as it were, from someone who actually knows the business a lot better than I did, and perhaps can add some nuance to that. So I'll introduce you all to Paul Wagner. Paul's the CEO of Allmain Group. Allmain is the largest investment in the Westferry Fund when you combine equity and debt allocation. It's one that we've been very pleased to be part of, and one that is, after some difficult moments, stunning in my view to come really, really good, and one that I think we can be excited about over the next year or so. Can I just point you to the Q&A box and ask any questions that you have as the presentation goes on? You pop in there. At the end, happy for you to unmute and ask questions directly. But for now, Paul, welcome. Thanks for your time. And can I start by just getting you to give a bit of a background about yourself and about Allmain? It's from the time it was sort of founded, and tell us a little bit about how it came to be where it is now.
Yeah, certainly. So Allmain was a family-owned business, kicked off probably in one form or another in debt collection back in the 1970s, and sort of morphed over a period of time. It focused on providing specialised services to mortgagees, probably the major banks. ANZ was our first major client. It's been around for over 30 years now. When they started to put together their own teams to effectively work mainly internally to start off, their own legal advice inside, etc., to repossess properties and sell them. Now, back in those days, and we are talking the early 1980s, I suppose, someone went out to lunch or they went to pick up the kids from school, they come back and their house was locked up. We were in control and away things went. But since then, the process has become much more refined, much more regulated. And obviously the social license that the banks operate under these days makes the whole process a difficult one to navigate unless an experienced operator. So whilst Allmain went through this progression from debt collection through to effectively repossessing properties and becoming what's called a property presenter today, I was in high school, then a student, and then effectively started my working life in the oil and gas sector downstream. Moved into retail and eventually automotive retailing. The last probably 15 or 20 years was either director, CEO or COO, Chief Operating Officer, for companies here in Australia and in New Zealand. During that process, I sort of watched my father, Merv, who was the founder of Allmain, go through a process of working from abacuses, manila folders full of checklists, four-drawer filing cabinets, etc., and saw him embark on the path in the early 90s of actually starting to computerise the model, all office-based servers, office-based email servers, and effectively opening up a portal version of a case management system. Now, during that period of time, my involvement with Allmain was pretty much as an external advisor. I used to write tender documents, used to write policy documents on the run, just provide general advice from someone who was out there in the business world outside of the very insular, property consulting business to banks. As my father, now deceased father Merv, approached his elder years, he was not computer literate, very much a detailed case management person, but couldn't quite grasp that next step, which was to go cloud-based, was to take the case management system fully online. So with my wife, Annabelle, we bought the business, I don't know, 10 or 12 years ago now, stepped outside my corporate life and sort of started the process of fine-tuning the Allmain systems to provide services to the major banks, which resulted in us moving to ultimately a totally cloud-based case management system, and effectively having a whole tech stack, as Pete refers to it as, an ISO 27001 accredited organisation, which is pretty much the highest energy you can achieve for information and data security, which I suppose you all recognise these days is increasingly important. That's pretty much my story and where Allmate is today.
Thanks for that, Paul. And in terms of the clients you mentioned, ANZ, you act for another major bank, and then you have a whole series of other financial institutions. Is that right?
Yeah, so one of the strengths, I suppose, Peter, and one of the weaknesses of the Allmain model prior to Westferry's involvement, we were a one-trick pony. We were very highly refined at servicing, a number of the very large banks. And our case management system, our processes were all aligned with exactly what they wanted to do as they progressed from state-based offices to national control of this impaired asset process and their impaneling of large legal providers, et cetera, to do the work. So we actually worked with them all the way through and refined a process which was nuanced around what's required to make that, to protect their brand image and get a good outcome. That was our greatest weakness as well, because we're a one-trick pony. And as Peter's outlined in his document, banking, well, GFC to start off with, Banking Royal Commission, God knows what else. COVID was another, body blow along the way. Our single sort of income stream from major banks was proven to be readily interruptible, whereas prior to that, for the 20 odd years prior to that, it was safe, it was consistent, pretty much between 20 and 40 basis points of every resi mortgage in Australia went guts up, once a year. So you could sort of forecast what the bank's mortgage portfolios were, apply that, 20 to 40 basis points and work out what the market was and work out what you had coming in next year based on our market share. Those numbers no longer make any sense. So Allmain suffered through some downturns through what Peter's mentioned in his document, but also was never going to survive without broadening the client base, but also broadening the income streams. So the client base now is varied. Pretty much every major bank, pretty much every second tier bank, pretty much every major lender in Australia. We're on their panel of providers. Insolvency practitioners flesh out that. So there's more buckets out, shall we say, in terms of when it rains, we collect more water.
Thanks for that. Sorry, go on.
The Westferry investment, and I suppose the purchase of Tagmar, and Tagmar is about the same age as Allmain, about 30 odd years of age, one of the first companies to do this. They had put their toe in the water of trustee business 10, 15 years ago, and they developed that to a certain level. If you think of Allmain as basically providing a service where you repossess a property and we sell a property and all the stuff in between, the middle piece is about effectively making a place safe, making it compliant, presenting it for sale with one eye on the as-is valuation and on the as-if complete valuation, which are all done by sworn valuers, and trying to navigate our way through what's the best outcome for our client in terms of monetary return over the shortest time frame. The middle piece of that, which is about repairing, maintaining, and making compliant, is what trustees are very bad at doing. And it's also one of their major risks that they incur if they do it very badly. So the Tagmar business enabled us to get exposure to some large listed trustees in Australia. They quickly realised that our case management system was secure and very, very good at doing that anywhere in Australia. That enabled us to actually broaden income streams into servicing trustees. So we have an endless cycle. Rather than repossess and sell, we take control of, repair, maintain, and make compliant on an endless cycle. Eventually, we sell the property for them, or we buy a new one to put into their portfolio. And that, I suppose, these days, as Pete's described, 9 months of hell, which it literally was hell. We're to the point now where that trustee business represents about half of the total income to Allmain per month and is growing on a monthly basis.
Well, let's just focus on that then. So as I outlined, Tagmar was a major competitor, but in the space that you were focused on, which is the mortgagee and possession work, um, they had been bought by Grays from their previous owner.
Yeah.
That, for the reasons I've explained, went wrong. When with Westferry's funding, Allmain purchased Tagmar. Um, just tell us a bit about why you think it was that the trustee uh, work was so difficult to lock in. Part of it, I presume, is just the bureaucracy of these very large organisations, and perhaps tell us a bit about the bit more about the trustee work, who does it, and why they're trustees.
Mm. Well, trustees, their sort of primary contact with the beneficiary or the occupants of these properties is a customer relationship manager. And they're not a person who's skilled in property management. They're not a skilled person who's skilled in financial management. They're effectively there because they um, can deal with a person who's vulnerable in our society. And they therefore require a raft of resources behind them in a timely fashion to meet the trustees' obligations to look after the beneficiary. The whole piece about reporting on a property's condition, what's urgent, what has to be done, what can be deferred, what should be renovated, what should be bulldozed and rebuilt is a piece that our system does in spades using a very large panel of registered insured contractors all over Australia. So you can point us towards a property in Wyndham, in far northwestern Australia on Bruny Island, somewhere in the anywhere you want basically. And we've worked in those areas over the past, tens of thousands of properties over the years. We have a database of local contractors, regional, national, as well as selling agents who we can buy and sell through. So our case management system enables us to provide a focus on a particular property, bringing to bear resources which we can apply to the property, which in a date and timestamp fashion to meet the trustees' obligations for transparency and get things done.
And the
So
trustees
for an
themselves
example
are
there,
very
Peter, I
large
suppose the
organisations.
simplest example is the fact that it used to take them a month, we can do in 3 or 4 days.
Right, and that's so these are very large organisations, equity trustees, perpetual, uh, the
Australian Unity, etc. Yep.
Australian Unity, and the changeover to getting them involved with the software or the portal that Allmain has. What was your feedback on that? You touched on it in terms of time savings for the
Yeah.
trustees.
I think that it's been recognised for a long period of time that the only way to play in this industry was to, in this sector, I suppose, was to have an online presence. And all of our competitors over the last 10 years have provided that in some fashion. Where they've all fallen behind is that there's one thing to take the 4-drawer file cabinet and stick it online somewhere, and they can do it in SharePoint if you want to, and maintain and archive all the records. But to make that database of records interactive with all the third-party providers and the client in a fashion which makes it intuitive to use, no one else has really got there apart from Allmain. Tagmar spent lots of money through their parent company, Grays, developing this system, never got it to work with external parties. And they were still, many hundreds of thousands of dollars short of that in terms of getting there. Then you've got the whole issue of then taking it, putting it inside an information security management system and having it ISO accredited. So, just building is something you can talk to people through. Is it nuanced enough to do the job? Are all the third parties involved? Then how do you actually make it secure in terms of data?
And
And
if
that
you
was
don't
the
have the
Tagmar story. They just couldn't get there.
Yeah, because if you don't have those things, you're essentially using emails, which a lot of our competitors still
Yeah.
are, or which of course is not ISO level accreditation and is a risk from a cybersecurity point of view. Tell us then a bit more about the the portal. Why we're not a big organisation, but why we are where we are today, being so far ahead, being the only organisation that has the ISO 27001 accreditation. How have we been able to do that when others haven't?
It's a combination of good luck, smart and stupidity, Pete, how most of these things work out. I decided to keep investing in this at times where the business cash flows were quite low. We just pushed ahead and pushed ahead. So the product we've developed is very nuanced around property management. We can buy through it, we can sell through it, we can also maintain things at a very granular level using literally thousands of third-party providers. And to do that requires knowledge of your client base, what their systems and processes are, and also nuance it to provide an improvement opportunity for their own internal processes, and then effectively wrap it up under an IT security blanket. So I suppose, Pete, that other of our competitors basically got to a point where it got too hard. They stopped investing and just fell behind the pace. Cybersecurity 5 years ago, when you went to apply for a tender process, it used to be, you open up the first part of the request for proposal. Do you have an ISO accreditation? Yes or no? You tick yes, and they go to sleep. No one had one. You tick no. Next 15 tabs open up on the spreadsheet. Well, what have you got? Tick, 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 tick. Months of input of data, writing policies on the run. And then the business would be able to look at that. And these are very large, in some cases, multinational organisations. And they'd have a look at it and they'd say, well, the response to the tender fails on these items. What do you think? And the operations part of the business would take a risk assessment and say, we accept the risk and sign off and move on. And that was the accepted practice for, so we say, 10 years. When we started to have the major data breaches here in Australia and around the world, the opportunity for the operations part of the business to accept risk for cybersecurity was taken away. These days, if you don't tick the box, the whole thing shuts down. There's no obligation to provide more material. So perfect timing, Peter, I think, in terms of, whilst it almost killed us in terms of investment to get there, we made it across the last hurdle at the perfect time when the world went into a cybersecurity meltdown mode. And to catch up at this point in time for our competitors who haven't diversified their income streams is a very hard thing to actually achieve. Major investment with limited return in a more expensive environment to do it in.
And you've had a developer with you through the whole process who's still with you, and IT security who's external to the company, both of them external to the company, but have been with you through the process and are still around?
Yeah, look, we certainly have some favoured providers. We have preferred, supplier status with them where they've worked with us for many years. There's also some redundancies in place. At the end of the day, I think we've been clever in navigating our way through this environment, making the investments in hindsight at the right time to come out on top of the pack at the end of it.
And tell us about how all of this, then the sort of downturn and now stabilization and the IT security environment's affected the competitive environment, perhaps with APAC as an example of one outcome.
Yeah. So probably if you looked 5 years ago, there were probably 8 to 10 providers of what we do in Australia of various sizes and scale, and they all had their own client base. These clients are very sticky. Once you've won a tender, unless you do something tragically wrong, you tend to be a provider for quite a number of years. If you make a mistake, they'll basically, they're capricious clients, the banks. They'll crucify you with the stake if they have to, but they prefer to actually fix the issues and move on, mainly because there's a huge cost for them to impanel a new vendor to their system. That's the main reason. So our competitors, Tagmar, APAC, Peter's just mentioned, etc., all moved along with their own client base. As an adjunct to Allmain, we spun off the software platform into a separate software company, which Allmain now licenses their own product back through, to enable us to promote the software as an opportunity to get more property presenters online. If we couldn't have the whole file fee for selling a property, why couldn't we have 10% of that file fee for a bigger number of files, providing the IT support behind the sale process? So one of those clients who actually signed up was APAC, and they've been around once again for, I don't know, 25 or 30 years. They dealt with the largest institutions in Australia, and their own systems fell behind the pace. So their first option was to actually license the Allmain or software and move on with their client base. And they sort of signed up and we started that integration process. During that process, the owners became to realise was more than just effectively having a bit of software. It's about all the other things that support the software, the business systems, having a chief compliance officer, the documentation, et cetera, et cetera, et cetera. And it just got too hard. So they basically offered up their business for sale to Allmain rather than sort of keep pushing ahead to try and not just have a software solution, but a business solution to servicing these clients. And we've seen that end up with probably there might be three competitors left in the marketplace, of which we are certainly number one. And the position that's changed from us being a price taker in this business to actually having some power these days. I had a phone call yesterday from one of our credit union clients who's just merged with an Australian bank, and they were ringing up to pretty much ask would we be happy to take on their acquisition as one of our clients as well. Now, 5 years ago, those calls were never made because there was a whole raft of alternatives out there. Whereas these days, there's less opportunity for this client base to find somebody who can service their needs. And the needs can't be, it's not an AI displacement opportunity. There's too many nuances in the processes. There's certainly parts of our process which can be assisted by AI or just development of the IT platform in general. But at the end of the day, it comes down to providing a consulting solution to a client based upon many and varied input from a whole raft of third parties.
Well, let's explore that a bit more, the barriers to entry, because one thing that I had to get my mind around was this idea of the ISO accreditation first. Let's just focus on the ISO accreditation.
Yeah.
It's not just about having the data security in the portal. That's a necessary condition, but it's not sufficient, is it? It's a much bigger picture and requirement, and you're going through an audit at the moment.
Yeah, so the helicopter view is what's called an Information Security Management System. It's an ISMS in shorthand. So you have to have an ISMS in business these days, and the ISMS can then be accredited to an ISO standard. But the first thing is to understand what are your information assets, where are they held, who controls them, how are they amended, etc. Then you have to actually apply controls to them, and that set of controls enables you to achieve an ISO accreditation. So that's that path there, Pete. It's a business maturing process. It means you don't leave things behind. It means that there is a pigeonhole for everything. But it's a difficult process to navigate through, particularly with a small staffing of less than 20. And I think, as far as I know, we're one of the only companies in Australia of our size with our staff which actually hold that accreditation at this stage. If you're a major bank or a major legal service provider, you have to have it. But it's a rare occurrence for an organisation of our size to have it and maintain it. And our record of auditing now, I think for the last 5 years, is zero non-compliance. So a clean bill of health at every audit, which is once again an unusual experience.
It becomes relevant though, doesn't it? Because all of our competitors, the people in this part of the industry, are small companies, but they're handling incredibly sensitive material from the banks. And so it's something that immediately lets the bank know that we're up to their sort of standard that they require.
Correct.
And I just want to highlight also the degree of trouble you have to go to get the software, the portal that Allmain has is through APIs, is integrated with other systems, with lawyers, with banks, with real estate agents, with other service providers, contractors for maintenance, etc. I mean, you've managed in the last few months to get the system on board and accredited with the Commonwealth Bank, for instance, and that's a long, torturous process that it's fair to say would be difficult for other people to do.
That can be a 10-year process, Peter, for that. Yeah.
Yeah. So it involved penetration testing. It involved extensive sort of liaising with their IT staff and convincing them that obviously they're not going to integrate a piece of software into their system without it being confident of its security.
Yeah, I think so. They went to tender, I'm going to say 4 years ago now. At that stage, Grays, who purchased Tagmar, was successful in that tender process, but it was through effectively suggesting we will do, rather than we have. And they could not deliver that final solution to become fully empaneled. When we purchased Tagmar, which was back, Pete, what, in July of 23. It's taken us less than 9 months to jump every hurdle, leap through every hoop, and become a fully accredited CBA provider over that period of time, which is
Mm.
which is a fast track.
All while also getting that integrated with the large trustees who had not
Yes.
had any sort of level of service like this. So back to this theme of, why can't other people come
Yeah,
in?
barriers to entry.
Um,
Sorry.
yeah. So
So
the
apart from the tech stack and apart from effectively, well, that's probably a huge part of it in the ISO accreditation. The insurance requirements, because of what we discussed in the past, cybersecurity, etc. PI insurance went through a huge spike in terms of its cost over the past few years. What we do is not well understood by underwriters. And are we real estate agents? Do we buy? Do we sell? Are we consultants? What do we do? So it's pretty much, we're told by our broker of 25 years, and we changed brokers recently to align ourselves with an idea that Pete gave us, which worked out really well. It's very difficult to even get the insurances required to operate as Allmain. If you have an aligned business, you might be able to sort of, change part of your business model, if you can buy the skill set and buy the case management system. But as a startup, almost impossible to become insured in this environment.
and then, as you say, the larger pieces of work are still really done by tender. And in Allmain's history, for instance, you've never lost a client. It's hard to get into the customers if you don't have something that's massively going to outperform an incumbent.
Well, the natural inertia of a large bank is that they don't like new vendors. They'd rather work with vendors, and CBA certainly is a classic example. They have their own risk management assessment process of their vendors, and they've sort of moved their tender cycles back to probably shortest time frame might be 10 years, and they work with that vendor, with their panel of vendors, in terms of a continuous improvement process based upon changing risk profiles to different elements of the services they provide. And if they can fix things along the way, why retender?
Sure. Now, it's important not to be complacent. Of course,
Mhm.
the issue of law firms, obviously they're involved in the process. Most of the time, or some of the time, instructions flow through them, or at least they're an adjunct to the process. They've shown that they are groups who potentially have the resources to
Yeah.
get uh, portals up to speed and get insurance, for instance, where others may not. What's the threat from them? Do you think, as people that might act as direct competitors, or do you think they'll always act as sort of bit players in the process?
Not so much bit players, Pete, but a bit like I can't play in some elements of the supply chain from notice of default through until, so I can't sell the properties. I can't be licensed to sell them. Australia will have to employ someone. The legal service providers have a very clearly defined role in this process, and they're not able to sidestep and take on two or three different elements of the process. So we're all pigeonholed, shall we say. There has been a couple who've attempted to, large national firms, segue into spinning up separate organisations that aren't bound by the same contractual obligations to provide legal advice. So they can provide legal advice under company one. Under company two, they can provide mercantile services, which is your field calls, your document service, etc., and potentially even do what we do. But the second they start, I've had some discussions recently with one of the managing partners of one of these firms. As soon as they start, they realise that it's a great idea, but there's no IP in that business. It's a thought bubble, it's a structure, but how do you actually run it? What's the software platform? Where do your staff come from, and what do you actually do? So it's even firms with that level of horsepower, Peter, with the ability to have an ISO accreditation, to effectively have all the insurances known to mankind, and some very smart people working there. This is not a simple process to develop a new consultancy. It's taken years to actually develop the IP to achieve this.
Yeah. And then just, I mean, in relation to them, there's the benefit that our cost structure in terms of
Yeah.
overheads would also be a fair bit lower than theirs.
Correct. Like even, you probably all know what partners charge. You know, senior counsel, solicitors, down to paralegals. The charge out for a paralegal to a bank is a multiple per hour of what we can get away with, what we need to run this business on to be profitable. So totally different cost structures.
Yeah.
In working from major capital city addresses, it just doesn't suit what we do. Not a
And
requirement.
there's nuance as well, isn't there? It's not a process. Obviously, large parts of it can be automated, but each case involves individual elements that are, often quite erratic or emotional and require or throw up a unique situation. And uh, is it fair to say you've got the background in terms of having dealt with some of those situations?
Well, the company certainly has, and the organisational knowledge is, quite well documented how we go about doing things. There is a cookie cutter approach to how we approach things. That's how you can process a large number of files. When it comes down to, the war stories, the difficult parts of the process, that's what also cements you with your current client base. We're doing an eviction for one of our clients in Victoria at the moment. It started on the 1st of May of this year. It's still going on as we speak now. We spent $1 million in flow-through cost on that file, and we're still going. The property goes to market tomorrow. That individual, the borrower, is currently harassing in person the CEO of that major bank, and everything flows downhill from there. Who did they engage to mop it up? They engaged Allmain. So at the end of the day, there is, business practices and processes, which for us are very well documented and very well trained and cross-trained, which makes us a true consultancy rather than just a cookie cutter, case management system for processing properties.
Yeah. I'll finish up just to get your views on where you're seeing the industry at the moment, the workflows compared to historically. What are
Yeah.
the MIP numbers like?
Mortgagee in possession, Pete's referring to, work from the banks. Probably certainly recovered post-COVID, and it's picking up year on year. We're probably up 10% on last year, and it's certainly stabilising at about probably 60% of pre-COVID levels as we speak now. But that's over a broader client base. So with more buckets out to actually catch the rain, what we're looking to see for that to really spike and to fill those buckets up is a couple of different factors, one of which the ATO started to become more active, and that certainly pushes the banks earlier in the piece to take action to recover their debt, or property values starting to effectively ease off in certain areas. Some parts of Western Sydney, particularly probably a lot of Victoria these days, you're seeing property values flatten or property values even go backwards by a few basis points or even a couple of percentage points. As soon as a bank sees that, they no longer see the opportunity of a increase in value of 10% per year to cover off on their default interest rate and also give the client more time to get out. It used to be 90 days to 180 days and the client was out of their property. We were in possession. Now it's 2 or 3 years post-COVID. So one blip in property values, which can be caused by a whole raft of factors, Peter, which are outside of our control. Now, there's talk of iron ore pricing is coming off in WA. What's happened to the WA economy? Who knows? You're seeing it in Melbourne at the moment. Any change in property values creates an instant spike up in possessions by the banks. At the moment, if it's a property in WA, you can sell them very, very quickly because investors are buying them on rental yield. So less possessions per head of population. Victoria at the moment, change over the last 3 or 4 months, a higher rate of possessions per head of population in Victoria. So it's a delicate balance between them exercising their social license to not keep people out of their properties, but also keeping an eye on this impaired asset base. So property values cooling or more activity by the ATO or change in economic circumstance are the big triggers for that, Pete.
But as you put it, it's a good analogy. We've got more buckets out, and at the moment, even on the lower industry numbers, that's enabled Allmain to reach a level of work that is at least over the last 4 to 5 months has been consistently profitable when you add in the trustee diversification as well.
Yeah. So the current cost base doesn't need to change. The heavy investment cycle in terms of buying and basically integrating is gone. And we're certainly seeing uptick in MIP and certainly a significant uplift in the income earning potential from trustees. We're becoming a preferred provider, not just a provider. I think Pete mentioned also in his document, part of winning this was we had to license our software platform to one of our competitors. So we're seen as being a preferred mousetrap out there. Lots of buckets out to actually catch at the rein in the mortgagee work, and a very good trajectory in providing a range of services to trustees from buying properties, selling properties, and maintaining them. And month on month, we're seeing that income lift. So at this point in time, the future looks good as far forward as we can see for making sustainable bottom lines on the current cost base.
And in terms of other things to look forward to, you mentioned there's so I think we can name them. MyState is a bank we act for, and they've announced them ASX yesterday that they're merging with
Ozbank,
Ozbank,
which was the old Banana Coast Credit Union. So why would you change the name from that?
And so that book will theoretically join us. They're not big books, of course, but every bit counts. And perhaps a more significant one is that ANZ's a client, of course, and only last week, I think, or a couple of weeks ago, they got a CCC approval to take over Suncorp.
That's correct.
Yeah. So theoretically, the Suncorp book would come over to Allmain when that happens. Thanks very much, Paul. There's some good questions coming through on the Q&A, and I ask people to put their questions in there if they want. Thanks, Ashish, for your questions. I think that the first question, and Paul, I don't know if you can see this on the Q&A, but Ashish asking about the steps taken to diversify Allmain's client base. We touched on this a bit earlier in the conversation, I think, before Ashish might have come on board. But you've spoken about Allmain having moved from really just acting for with a focus on the big banks to perhaps with Westferry's help and thanks to the takeover of Tagmar, that's extended to a massive increase in the number of clients, both from the size of the banks and other mortgage providers, non-bank mortgage providers, and perhaps most importantly, we've gone from trustee work and the 2 to 3 big trustees clients going from 0% of our work to near 50%. So that covers, but perhaps I can get you to answer, Paul, the second question. Which
looking at the IT security issue here. Yeah, so thanks for the question. So certainly major data breaches can be an issue for anyone. So these organisations didn't appear to understand some of the fundamentals, although the big organisations, lots of arms and legs. The first thing, if you don't need the data, don't keep it. The single safest way to protect yourself from data breach, actually there's two animals here: data loss, data breach. Data loss is us sending material to the wrong person, okay, and that's bad. Data breach is a malicious actor encrypting your database, ransomware, or just stealing data from you, okay. So the quickest way to effectively not have to predict from data breach is get rid of the data. If you don't need to get rid of it. We have data destruction policies, which means sensitive materials destroyed once it's used and got rid of. It could be a driver's license, could be a passport, used that day, destroyed, okay? Secondly, we basically have a data destruction policy where everything after 7 years is destroyed. I've just had stuff there for 15, 16, 17 years, just not required. So the ISO accreditation has forced us to actually look at what data we hold. Is it needed? If not, get rid of it. If it is needed, how are you going to protect it? So you can have an encrypted database, for argument's sake, and all our systems sit in Microsoft Azure in tier 1 data centers behind a whole raft of firewalls. Also, what's called a web application firewall sits in front of that again. But not only is the database encrypted, the individual documentation inside the database is encrypted. And that's a level of security which is not it's a gold standard, shall I say, in how we go about doing things. So if you don't want it, if you don't need it, don't keep it. If you do have it, when you can destroy it, understand what you're holding, where you're holding it, how it's actually being encrypted are the basic fundamentals of a information security management system. Data loss prevention, random things sent to a whole raft of different people. We do that through use of the portal, as Pete's described, API, application and platform interfaces, where we're dealing with legal service providers and other organisations, portal to portal rather than emails. And if we are emailing someone, they come from a database which is maintained on our platform, and the platform sends the emails rather than us typing in the wrong email address. There's no such thing as a perfect system, but that meets the current highest standards for information data security. We also employed another layer of consultancy apart from our trusted programming resource and our trusted network engineer. We employed what's called a virtual chief security information officer. And that's someone who has the network engineering background, has programming background, but their speciality is to be up to date with effectively current trends in cybersecurity. And that person consults to us on an hourly basis per month to review our regular IT security meetings. We also moved into what's called a hard SOC environment. So rather than just sort of discover we had a breach or discover something went wrong, our systems are monitored 24/7 by an external party. That external party monitors a whole raft of different clients' databases. So if there's a common method of attack being used to steal data, we're notified instantly and able to put remedial action in place. That's a very, hopefully, short and very rapid fire description of a rather complex system, but that's how you actually achieve the ISO accreditation.
Thanks for that. And all that stuff it's expensive. It crimps margins and it's been very painful. And it's probably put you at a competitive disadvantage for some years against some competitors who just weren't putting money into this stuff. But
Without doubt,
it's
without doubt.
very suddenly because of Optus, because of all of these other things, become it's gone from nice to have to essential in the space of probably 2 years. Is that fair?
Yeah. With reference to the chat GDP or AI question, it's a good question. I mean, like you can create at this point in time, and not saying where it'll end up in the future, you can create very good documentation from chat GTP. Write me a policy on ABC 123. Write me a master services agreement in standard format, and they're very useful tools. But in terms of looking at a situation, which is occurring in real time or may occur, and providing consulting advice to a client whilst interacting with your legal service provider and agents in the field, I don't think that's going to happen tomorrow afternoon. That's not going to be an AI disinterruption in the near future. But having said that, if there's a process which can be replicated, the cookie cutter approach, there's certainly elements of that. But the vast majority of work we do is bespoke case-by-case consulting work for clients and requires face-to-face communication with people in the field, which is not impossible to, well, currently impossible to do with artificial intelligence.
And a question for that, Paul. This is something we discuss regularly, perhaps in every phone call we have. I mean, there's a lot that can still be bedded down with existing areas of work. I mean, if there's any macro change, there could be a massive increase of work within our existing service offering. But we have discussed this, and there's perhaps limited, but nonetheless some ideas.
We're not NASA. There's no intention of being NASA. Ultimately, I see by Pete's 100% right. We've got lots of buckets out. And we have full recourse lending in Australia, and that's not being exercised as we speak now. If full recourse meant you lost your property after 180 days 5 years ago, you're still in it 3 years later today. That's got to change at some point in time. Okay, that will naturally migrate back at some stage. The trustee business, there are still more trustees out there in terms of integrating our business model into those, but I think the legal service providers we touched on a while ago who are dabbling in trying to develop other income streams and our other remaining competitors who require software solutions, that's probably the next logical stage for us, is to, without giving away our IP, provide a managed service to assist these organisations to expand their operations. And in doing so, the pool of trustee properties and the pool of mortgagee properties remain the same. If we can't have all of the files, why not have 10% of the file fee for all of the files? That's not a bad objective for us to achieve.
Thanks for that. Finally, from Ashish, there's the question around the software. Can it be built out to go into other areas? I think I touched in my summary that
Yeah.
It is very specialized, and once you start going into some adjunct areas, you do hit, some pretty solid competition,
Yeah.
and start needing to incur some pretty serious development costs, which, may be something we could do one day, but is not in the short term plans. Is that about right?
I agree, Pete. I think also that not so much stick to our knitting, but that's part of it. To develop software in a cost-effective fashion, you need good programmers, you need good network engineering, and good security environments to do them in. You also need someone who understands what you're trying to actually achieve. Otherwise, there's lots of wheel spinning in terms of developing redundant code, things that aren't fit for purpose. And at this point in time, the knowledge set in Allmain to take on, case management for yellow goods, repossessed, movement equipment, it's just not there. So as opportunity presents itself, as we bring skill sets into the organisation that we could leverage to provide expertise in these other areas of distressed assets, there's a potential to develop the software, but at the moment, there's no plans to develop on speculation we could break into another market.
And there's been discussions around, I've had some discussions with one group about other distressed assets. I mean, just vehicle assets are an obvious one. From the results season the last few days with companies like Solvar, which is the old Money 3, and I'm aware through family members that there's other large providers who are seeing this, and that is a significant increase in arrears and defaults in vehicle loans, which is, not necessarily happening quite yet in mortgages. Although, having said that, the Westpac results certainly showed a sharp increase in arrears. But yeah, so vehicles is another area where the software could be easily, well, not easily, but fairly readily amended to take into an account a service offering there, perhaps.
I agree with that, Peter, because the mercantile agents we deal with through now also, dealing with real property, also deal with these vehicles at the same time. So the access to the field services is there now through our existing, database of merc agents. And, whilst I say it's a real property case management system, it's about widgets. A widget can be a car, can be a house, can be a commercial property. So the platform will handle those. So if it's an impaired asset, we can deal with it. But outside of that impaired asset realisation process, there's no plans to make it managing properties for rent rolls, for argument's sake, or something along those lines.
Yep. Charlie, thanks for your question. Look, the answer to that is that it would be priced as a services business more than a software business. I mean, to be priced as a software business, on a revenue multiple or whatnot, you'd really need to have a large target market, which our software offering just doesn't have. Well, what I would say though is that the software and all the other things we've discussed means that we're talking about a service business that has gone from being sort of almost like not quite commodity. It's always been, has some specialization, but has been something of a commodity business 10 years ago to a super specialized one with incredible barriers to entry, a diminished competitive landscape, significant pricing power. I mean, we're going to see price increases coming through, which is not something that's been able to happen for a long time later this year. And so the software has turned this services business into one that is deserving of a higher multiple or a higher valuation than what would otherwise be applied to a consultancy or a services business. So that's probably the best way to look at it.
I
Vaughan,
love Vaughan's question there. What's the exit strategy? I mean, that's a great question, Vaughan. Why buying with an exit strategy? My own personal view there is that the opportunity for someone in our current, another one of our competitors to buy us is no longer there. My view there is it'll be, if Pete, this is totally unsolicited, we have discussed it in the past, but certainly, one of the larger mercantile agents, you've got some of those now which have got international arms and legs looking to diversify their income streams, or potentially one of the large legal service providers looking for a solution to try and diversify their income streams as well. So there will be opportunities, which my gut feel is in the next probably 18 months to 2 years, you'll start to see some interest in that. At this point in time, I see it's stable business making some money.
Yeah, and from Westferry's point of view, we go in with long-term views. It's something where I would have no problem being in it for 10 or 15 years as something that churns out a really good level of cash on our investment. We've managed to get it after, a very difficult 6-month period, getting it to a point now where even with no macro recovery in this space, it's starting to, touch wood if things continue as they are currently, and this month again looks good. Providing a very nice return on investment. With some macro change, there's massive leverage in this business of being able to, increase revenue significantly without having to increase costs anywhere near as much. So that's a starting point. Can become a really good cash cow. But yes, it's for all the reasons we've outlined. Paul's there's strategies in place to bring people in to gradually replace Paul. Paul will be available to us for a long time. But Paul, as you probably just heard, is not going to stand in the way, and neither are we, to any sort of approach. And the good thing about this industry is through Paul and others, there's constant back and forth with law firms, with mercantile agents, with all these companies, and the idea of being approached or giving someone a hint that would be for sale at the right price is
I think
pretty easy to do.
The model, Peter, has legs as it stands now, particularly with the trustee and MIP work to make money for years and years to come. But I love the question, Vaughan, because you have to have an exit strategy plan B somewhere in there. But I think it's got quite a few years yet to go of making some good money with the current environment and setup.
Yeah. And so actually that's right. No doubt you can replicate, or not replicate, but you can build apps. You can build things. Well, the software on its own is useless without a whole business structure around it that has the experience and has the relationships with the banks and the tender wins. The banks aren't going to go to someone who has an app but doesn't have insurance or business structures or a history of dealing with really sensitive cases. As you've heard, you've got an example where the person's literally stalking the CEO of a bank. These things require, sometimes at least, if not often, a bespoke approach, a human approach that it can't be replaced on its own with ChatGPT. And the ramifications of AI, I don't think any of us can predict. Maybe in 2 years you'll look back and the world will be controlled by robots, and I'll look like an idiot for saying that. But I just it has this business has that sort of human element that is difficult to simply take over with software, in my view.
Vaughan, your question about expanding to New Zealand. There's potential to expand New Zealand. The actual traditional volume of MIP properties over there is quite low, and the trustees we deal with currently don't really have much exposure to New Zealand. We've played with it over a period of time. We've watched our competitors basically enter and then exit New Zealand. The single biggest obstacle over there, well, apart from in the last few years, it was a booming property market, was the fact that the property law enabled people to actually stay in their properties after they were repossessed through the sale process. So the banks had a very different approach to how they dealt with the impaired assets. A lot of voluntary sales occurred. So the opportunity to step in there as a consulting resource, repossess, remove the occupants and sell the property per proportion of population is much lower than what it is in Australia.
I mean, on overseas expansion, we've got the benefit of so Steve Walsh, who's the principal of APAC, which we've bought it, and Steve now works on a sort of bonus and salary basis within Allmain. Yeah, he's quite experienced in this area. He I think had tried to kick off something in New Zealand and Singapore at different stages. I think he was approached by Peppers, who manage a large book of loans in Ireland and the UK. Um, his experience, and it's worth looking at because this is going back a while now, but his experience was it was because of different legal structures.
Well, chain title in the UK makes it a pain, Pete, to push
Yeah,
things through. Yeah.
um, I think that was a possibility. I think it was more they just didn't want to move for that one. But if with New Zealand and Singapore, I think the issue was that the volumes just weren't
Yeah.
there, and in not so much there weren't enough properties, but that the laws weren't meant there weren't enough mortgagee and possession
Well, I mean,
processes.
there's still, properties per head of population to be the same. I imagine the density of population. It's just more how the MIP process was executed in New Zealand is executed. Less opportunities to actually make any money out of it.
Yeah, but yeah, I mean, our focus has been just getting to profitability, stabilizing the business, which we're really now on the track to doing. But as I say, I speak to Paul, bore the crap out of him about different expansion opportunities all the time, and that all of these things are constantly discussed. So yeah, but there's just so much upside from our existing service offerings in the short term with any turnaround, and if we don't get the turnaround, and if it's a long term, you know, sort of in ground change to how these things operate forever, we're still at a point where we're okay. We're making a nice return. So
Mhm.
that's been the investment thesis. Look, thanks very much for all your questions. Really appreciate you all listening in. I'll organise for a recording of this to be sent out to everyone. Look, send me or an email, and I'll send it on to Paul if you have any other questions that come to mind. But look, thank you very much, Paul. Thank you very much for your time, and
Thank you. Thanks for your interest.
we'll see everyone later. All the best.
Good night.